Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So if I'm looking to get short, I'm really keen, and I cannot emphasize this enough, as somebody who's trading order flow. Very few people talk about this. It's really key. But if I'm looking to get short, I'm really keen on being very clear about what the people buying are doing. If I'm keen on getting long, if I'm looking to get long, I'm very keenly monitoring what the sellers are doing, because that's the threat. If you're in a cage and there's a predator in that cage and there's a door that has a big button on top of it that you can hit to exit, I feel like it's kind of dumb to focus on the button on top of the door, because that's what you want. It's much more important to me to survive the situation to keep an eye on the predator while making my way to that exit with a button on top. But I can't sit here and pretend like the predator's not there. And if I'm getting short, the predators are the buyers. Those are the people that are going to hurt me. And if I'm getting long, the predators are the sellers. Those are the people that are going to hurt me. So I want to be very keenly aware, just like with that lion in the cage, in this lion's den or whatever it is. I got clumsy and I fell into the lion's den, right? And I want to keep an eye on what the lion's moving. My response is going to depend extremely immediately on what the lion's posture is. If the lion's about to make a run for me, I'm going to respond. But if I'm distracted by making my way slowly towards the door and towards the exit, and that's all I see, I'm probably going to get eaten, or at least bitten. So it's better to just watch that force that's working against you. So as I'm watching for the short here, I want to see how does it flow to the buy side. If it's just kind of weak flow to the buy side as it approaches a level that I'm interested in, a stock zone, mid, whatever, a cluster, things like that. If they seem to be lifting, but it's like really hard work lifting to move price, then I'm much more confident getting short. How do you detect this in real time? It's really a function of just watching it. And this is where replays are really important. Being able to replay how the market is printing as it's approaching the prices that you're interested in, you start to really develop a sense for when things are working out well and when they're not.
If you've enjoyed this analogy, subscribe to the channel and hit the bell icon to be notified about each new Convergent Trading video.